Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hello everyone, my name's Manpreet and this is the Weekly FX Navigator podcast where we look for opportunities in spot FX markets. Today we'll focus on the Canadian dollar and the Japanese yen, two currencies which have seen technical breakouts against the US dollar, albeit in different directions. Now first on the Canadian dollar, since it made its 2021 low in June at around 120, dollar CAD has experienced a rapid rise to approach 130 by August as large long Canadian dollar positions were squeezed out, driven by a slowing Canadian economy relative to the US. The peaking process was marked by a technical formation called a head and shoulders top, where there are three peaks. The second and highest peak represents the head, and the first and third highs represent the shoulders. The neckline of this pattern, which is a key technical level, was broken to the downside last Friday at around 1.2560. So technical suggests a decline towards 122 may be seen in the coming weeks. This move appears to be backed up by fundamental macro drivers that favor the Canadian dollar relative to the US. These include expectation of economic growth outperformance in Q4, high and rising oil prices that support Canadian exports, and a more hawkish Bank of Canada that has already begun to taper bond purchases. The story for dollar yen is quite different. The pair has been trading in a fairly narrow sideways pattern between 108 and 112 since March. Yesterday, though, the pair broke out sharply to the upside to the highest level since 2018. Now, provided there are no relapse below 110.8, this rally could now extend to the next technical resistance around 115. The yen is quite sensitive to real or net of inflation bond yield differentials, so rising 10-year yields do attract Japanese capital inflows, and also rising oil and gas prices have a negative effect on Japan's trade balance, as Japan is a significant energy importer. Now, no FX investment is without risk. Interest rates and energy prices are the mutual drivers for both the pairs we've just talked about, so we would monitor closely for any changes in the outlook to either of them. This week, we also have the annual World Bank IMF meeting, we have a G20 meeting, and a number of planned central banker speeches, so we'll be watching the tone and narratives closely for any surprises from consensus. So that's it for today's podcast. If you've enjoyed what you've heard, remember to like, share, and subscribe. Thank you for listening, and we'll speak again next week.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.